Hi folks, it's Mark McDowell here from FX Professional, and we're just taking a quick look at a trade from yesterday on the pound Japanese yen resistance line on the 4-hour chart. We can see it's the line in question is this black resistance line just here. 3 contact points. This blue line's a longer term trend line on the daily chart. You can see it bounced off it there and it broke through the line here. So the directional bias has now changed in favor of the uptrend for now anyway. And so yesterday we were looking at this picture here as the price bounced off the 61.8 and then came back up to the line just here. So I want to go down into the 1-hour chart and really just point out a couple of things that I felt were an interesting picture and wanted to share with you. And it's just the rise from this low just here. You can see it's a nice direct rise up to the resistance line where it takes a bounce and moves down in a nice corrective 3-wave structure. Let's just put that in. Okay. And then what happens after that is crucial really for the break. At that particular point, we've got obviously we've got a higher low just here. And that's a higher low from this low down here. So once I've got my higher low, really I want to ensure that when the price starts to move up that we see a series of higher lows and higher highs as well. And in the short term we did get that. We got it rising to this little high here. And then it comes off and it puts in a smaller, shorter term cycle higher low just here. So that was really the indication that the trend was resuming after the 3-wave move down here. Once this price got above this particular high here, that was our indication underneath the line that the uptrend was resuming. That's important. I can't overemphasize that little pattern just there. And then it rises to break through the line. Now, as it's breaking through the line, it's also putting in a higher high on the bigger cycles there from that high just there. So we'll draw that in. Whoops. Okay. Okay, it doesn't want to do it for me. Okay, but and then really we get a nice solid break candle. You can see here the whole of the break candle is above the resistance line. Coming down, if we draw a vertical line on what the entry candle would be, we can then take a look down here at MACD, and you'll notice with MACD another key little indicator, especially if you're trading a new high on a breakout, is just to look down and make sure that you're getting a positive convergence on your MACD, i.e. MACD is putting in a new high, which it was down here, which is consistent with good momentum going into the break. So momentum looked good, good break candle, moving averages on the 1-hour and the 4-hour chart supporting the trade, all's well, and then it really just our breakout zone then is somewhere above that break candle. We just move that down. Okay, that's your breakout zone there. You don't want to be going in until you've got a good solid break candle that's finished, and then obviously the entry would be above that break candle, and so far that's about a move of 140 pips. So just to summarize, we've got a good resistance line, uptrend on the 4-hour and the 1-hour chart. Wave pattern looks good. The short-term wave analysis underneath the line is good, consistent with the resumption of the uptrend. Good momentum going into the break, solid break candle, and pushes on into the breakout zone. So a nice textbook bit of breakout trading there, and just wanted to share that with you. Hope you've enjoyed it, and we'll see you again soon. Bye bye.